Hi, this is Kerry Artek with Wicked Stocks, bringing you the Daily Apple Report for Tuesday, November 1st, 2022. This is our second edition of the Daily Apple Report. It will continue through November. Please click like and subscribe. Clicking like and subscribe, like especially, helps us. We're found out a lot easier on YouTube if we get more likes relative to views and all those algorithms that play out. Subscribe to the Wicked Stocks YouTube channel. It'll provide you notification each and every time new content has been uploaded, including the Daily Apple Report, and share the videos, if you would, with friends and colleagues. That also helps us. Let's jump into the charts. I'm going to start with this, and most relevant for the day itself. Once again, this 157.67. By the way, this is a daily bar chart. I think I may have a weekly chart here, one or two, but mostly daily bar charts. 157.67, a descending two-thirds speed line. That is based on the August high against the recent October low. I can tell you that if you take the high against the low and you go up 0.666, 66%, and you create a trend line projected off that August high that intersects at the 66% retracement level in the time frame in which the low was made. Can you imagine? Then you have a descending two-thirds speed line. And that is a trend-defining tool, especially over the course of 2 months, able to contain weekly buying pressures, possibly through November trade, and below which we can fall off. Not only to 143.51 over the next 3 to 5 days, or by the end of next week, I'll show that in a moment, but perhaps even further south into the 116.54 to 124.80 region as we continue into later year. 157.67 is also an upward pivot point into later November. So if we were to close today above 157.67, I think 3 to 5 weeks is realistic, whereby I would anticipate 179.60, this new channel structure that, if tested over the coming weeks, able to contain buying through the rest of the year and a significant upside continuation point into the first quarter of next year. But 157.67, weekly resistance below which this market can grow heavy and fall back into the low to mid 140s within the week, and even lower as we continue into later November. Let's take a look. Well, I've got 147.92, so I might as well just jump right back into that chart. Actually, I'm going to show 152.34. This is a repeat from yesterday, and that is the high settlement price from, was that Monday of last week, Tuesday of last week, and then we fell off nicely and came pushing back. 152.34, able to contain intraday selling. We did slip below this just a bit on Monday, and we didn't bounce significantly, but we held it really into later afternoon. If we break 152.34 today, 147.92 is attainable. I'm going to say likely today. I should have that 152.34 labeled right here. If we break it, we can test 147.92 intraday. And that new sharply rising channel bottom able to contain session weakness. Even if we break 147.92, and I don't know if we will do that today, I kind of doubt it, but we don't have far to go before reaching a more trend-defining support at 143.51, which is this rising two-thirds speed line based off this low and the high from Friday. So once again, if you take the October low, the recent low from a few weeks ago, against Friday's high, those two extremes, and you go 66% back, and you draw a trend line from the October low and through the 66% downside retracement level in the time frame in which that high was made last Friday, voila, you have a rising two-thirds speed line. And this is also trend-defining near term. As I mentioned in yesterday's Daily Apple Report, we could spend the whole week, possibly into next, filling this wedge out between 157.67 ceiling and the 143.51 floor. Now, of the two, and I know I have them weighted the same, I'll probably bump 157.67 up to a 4-star resistance here in the next day or so. It's right on the edge. A 4-star means monthly containment. And I've been saying that this 157.67 may well contain buying through November. And from here, we can fall to new lows and down to the 124.88 channel bottom by the end of November, perhaps. That would be clearly indicated if we settled today, for instance, below 143.51. But I think we could tag 143.51 this week, rally back into the 150s, and fill this thing out here for the week itself. But final thing I'll say about the downside is if we close below 143, 143.51, 124.88 becomes a 2 to 3, 3 to 5 week target. 124.88 on the daily chart. You can see on the weekly chart. Do I have that? I thought I did. Yes, I do. Is 124.80 on the weekly chart, which is backed up by a rising 2/3 speed line coming off that March 2020 COVID low. This area, and I'm wasting time talking about it right now. I just want to give you the heads up if you're a longer-term Apple investor or trader, is a sweet zone of support to buy into on weakness because it could contain selling through Q1 of next year and possibly well into 2023. But once again, not expecting it. Clearly, unless we close below 153.51, but it is attainable. This market can grow heavy and fall off into later November below 157.67. Let's talk upside. I don't know if I've got this. Trying to see if there's anything shown. There really isn't. I'll just say it right now that if we push through 157.67 today, we might reach 164.26 on an intraday basis. That would be another significant rally day. But bottom line, once again, closing above 157.67, 3 to 5 week buy signal up to 179.60. So once again, closing above 157.67. You could consider buying, say, 180 calls that don't expire until, say, the end of the year, by the end of December, and that would be a good play as well there. I'm going to finish with, once again, the triple Q, because it's a significant story to tell. The triple Q, the NASDAQ 100, which Apple is a part of, a significant part of, has yet to indicate a good low for the year and through the first quarter. And that would come if it could close above this 290. So you might watch this. This is a weekly chart, 290, 221 to 298.97. I don't expect it this week, but it might happen over the next few weeks, in which case we'll see pretty aggressive gains over the following 3 to 5 months to 353.76. And let's see. I'll continue with the SPY. The SPY, the S&P 500 Spider ETF, did not close last week Friday above its descending 1/3 speed line, a trend-defining buy signal if settled above, then likely to yield to 430s, 440s within 3 to 5 months. But that did not happen. It's 387.18 this week. If we close Friday above 387.18 in the SPY, we have a meaningful buy signal into Q1 of next year. Until then, the SPY, the S&P 500, of which Apple also comprises, is prone to falling back. Possibly to new move lows by the end of November. So I'm just going to leave it at that. That's all I've got for Tuesday's Daily Apple Report. You have a great day, and we'll be back tomorrow.